Hello and welcome to Trading Hour, live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always, Reema Tendulkar and Hormus Fatakia. Hey guys, good morning. Well, decent gains for the morning. Actually, I would say good gains. We're seeing a 100-point uptick on the Nifty currently. It's comfortably above the 25,300 mark. Whole host of sectors contributing. PSU Banking Index, that's of course the top gainer. So we have 1.6% gain on that one. Nifty IT too doing well today, 0.7% higher there. Metals, FMCG and Pharma. These are some names which are seeing some cuts, but not major ones actually. There are more contributors, so to say, on the Nifty rally today. And of course, we have Bank Nifty, which is in line with the index led by PSU banking names. The advance decline ratio absolutely in favor of the advances, 2:1. That's the ratio as we speak. So the broader markets also doing well. But look at that move on the PSU banking index. That's the reason we have seen that surge on the Nifty as well.
And they've been doing well for the last couple of days. So the PSU banking index is up nearly 7.5% so far this month. The only sector which has done better than the PSU banks in this month itself, in the month of September, in the first 2 weeks, has been the defense sector. The Nifty India defense sector is up 11.5% for the week. And even today, it's the top gainer with names like BEL doing very well. So if you look at the month-to-date tally, the Nifty is up close to about 3.5%, 3.6%. The mid-cap index is up 5.7%. Sectorally, it's the defense index right on top, 11.5%, followed by autos, 9 and, nearly 9.5%. And then you've got the PSUs. Mid-caps are doing okay, relatively underperforming, but in the green. The small cap index has a gain of, the Nifty small cap index is higher in trade with a positive advance decline ratio. But let's talk about stocks. Hormus is now putting the spotlight on the top movers in the market.
Yeah, the mid-cap index may be underperforming, but today's day belongs to volumes. And you see the eye-boggling volumes that you're seeing in the first couple of hours of the trading session itself. And you look at IRM Energy first up, and the stock is up around 15%, now 16% almost. It's the biggest single-day gain since April of last year. And the volumes for today's session are already set to cross the highest level since March of this year. So almost at a 6-month high. We've already had 13 lakh shares change hands in the first couple of hours of the trading session. The 20-day average is less than 11,000 shares. That's first. Now it's also broken above all of its key moving averages. It's 50, 100 and the 200 DMA above because of this move today, but has been an underperformer as the IPO price was around 505, so still down around 37% from those levels. Mirza International, the stock was up 15% yesterday. It's extending those gains today, another 13% in today's session, and today's volumes are already almost crossing yesterday's volumes within the first 2 hours of trade. Now we've already had 29 lakh shares being traded already today. The 20-day average is only 75,000 shares. Now, just a couple of days ago, its demerged entity, Red Tape, had confirmed some searches by the Income Tax Department. Interestingly, Red Tape is also trading with healthy gains in today's session. And Mirza International, courtesy of this 2-day move, has broken above its 50 and 200-day moving average. Not only that, it has also turned positive on a year-to-date basis. The stock of the morning, though, has to be KNR Constructions. The stock was at one point up around 9%. It's cooled off slightly from the highs, up 6% now. It's the biggest single-day gain since June. Volumes are already the highest since November of last year. But take a look at the volumes here. Almost 3 crore shares have already been traded in the first 2 hours of the trading session compared to a 20-day average of just over 2 lakh shares. And as a result of this move, the stock is now at its 50-day moving average of 207, and the 100-day moving average on the upside is at 213. Another underperformer this year is down around 39% year to date. And the last one on the list is Platinum Industries. The stock listed sometime last year, and it is the biggest single day gain that it has had since listing. And the volumes are already the highest since July of last year. We already had over 50 lakh shares that have traded. And take a look at the 20-day average, only 33,000 shares. And the stock is doubled from its IPO price, but down around 33% from its 52-week high, which is close to around 500 rupees for Platinum Industries.
Okay, all right. Some interesting names there. Thank you so much for joining us with that list, Hormus. But let's move on. Jefferies' Chris Wood believes that FIIs will make a comeback in India in the last 2 months of this year, even if the tariffs remain at current levels. Let's listen into a slice of this conversation.
It's quite conceivable that it wouldn't be a surprise if we traded sideways for the rest of the year. Now, if we get a sudden resolution of this US-India trade thing, that will trigger a short-term rally. But the more important point in India is, do we get a pickup in nominal GDP growth next year? based on the monetary easing we're seeing under the new RBI governor, and based on the various policies to trigger a boost in consumption demand initiated by the government this year. First of all is the income tax cuts, and then clearly I think more important is the rationalization and simplification of GST and the rate cuts, plus the monetary easing we're seeing, which has been considerable. All of this hopefully should lead to a pickup in nominal GDP growth next year, which in my view will lead to a stock market rally next year. But I am assuming a pickup in nominal GDP growth. If I'm wrong on that, then I'm too bullish. Nominal GDP growth is key because corporate earnings are reported in nominal terms, not real terms. Historically, India's been growing in a 10 to 12% nominal GDP range. This year, nominal growth's been, I believe, below 9%, and that reflects the relatively lackluster earnings outlook.
You're saying that you're saying it's entirely conceivable the market stays sideways for the rest of the year, but if we get a sudden resolution to the India-US trade issue, you may get a bit of a tactical rally. That's the call?
Definitely, and there's got to be a 50% possibility of that, simply because it's quite clear that these 50% tariffs are rather anomalous. It seems pretty clear they were triggered by the US president's personal pique that he wasn't allowed to intervene in the India-Pakistan dispute. And it seems pretty clear from a US foreign policy standpoint these 50% tariffs have needlessly antagonized India, and, it doesn't make sense from the US standpoint, from a diplomatic standpoint, to encourage an improvement in India relations with China.
You said there's a 50% chance of that happening will result in a tactical rally here in India. Now, just one question more. Foreign investors, Chris.
But one other point that... Yep.
Go on. Please finish that.
No, I was just going to say the good part about this 50% tariffs, it's accelerated what the government was planning to do anyway, but it's definitely made them expedite the policy, and that was to simplify the GST structure and cut the rates. So in that sense, the 50% tariffs will turn out to be good news in the medium term.
Okay, got that. Now, FIIs, Chris, have sold about $28 billion of Indian stocks since the highs in September of 2024. You started by saying it's not so much about India, but it's about other markets doing well. What are you hearing from large global asset allocators about what they want to do? And India in positioning, FI positioning in India is at 15-year lows, 16-year lows. So when does that start to turn?
So it is interesting that the FI positioning's become so low. I think there's a series of some ways coincidences. Last year, basically fourth quarter last year, there was big foreign selling of India to buy China. And that made sense because China basically, in my view, put in a long-term bottom fourth quarter last year at about 7-8 times earnings. So that was one definite big driver of India being sold to fund increased investments in China. And we've got to remember most of the foreign money in India is dedicated to emerging market money. And then in more recent months, what's been going on is that people have been selling India to fund increased investments in Korea. Korea's had a huge move this year, and most foreign investors have missed it, so they've been playing catch-up. And they've also been having to buy back Taiwan because the AI trade's been running on Wall Street, and the Taiwan market is the same trade as the S&P 500, because the S&P 500 is dominated by big tech and Taiwan's dominated by TSMC. So that's what's been going on in terms of people selling India to fund Korea and Taiwan. If it wasn't for this Trump tariff issue, I think there would have been a chance that money would have started to enter India, in the last 2 months.
Okay. FIs return net buyers by the end of the year, even if the tariff issue stays unresolved. I got that. That's a fair bit.
Because by the end of the year, we've had, the impact of this monetary easing should be starting to show up.
Chris Wood there in an exclusive conversation with Prashant. Take a short break. On the other side, we put the spotlight on the crypto market. Manisha Gupta joins in.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Crypto Corner today, we are going to talk about blockchain as a space in sense of companies, investments, and of course, the bigger companies or the names within that space as well. I will start with the data that we have from Block Data. This is their research, and they say that there are various companies, and 40 big companies, by the way, which are invested in blockchain as a technology, in blockchain companies as well. Alphabet is invested in 100 public companies as per this report. And then you have other companies like BlackRock, Morgan Stanley, which also have done big investments when it comes to this space. Alphabet has invested $1.5 billion in funding rounds in just about 4 companies. And remember, they are invested in 96 companies more there. And then you also have BlackRock and JP Morgan, which have made investment rounds to almost $1 billion and have raised that much for those companies there. This is a segment that seems to be really improving, increasing as much more financial investments, insurance, friendly movements start to come in on blockchain in sense of transparency, security, efficiency. There are more investments and work being done into this one as well. So let me take you through what all companies, apart from the major companies, are have invested in blockchain as a space. You have names like Samsung, Citi, LG, Wells Fargo, Commonwealth, Goldman Sachs, PayPal, Microsoft. These are some of the companies which have made big investments within the technology, which is blockchain, and have adopted a lot in that sense as well, in sense of partnership in their work there. What is blockchain really? Remember, blockchain is the platform, and the native of that in sense of currency is called a token or a crypto. These are distributed databases which are shared among nodes of computer networks. So one thing that gets bought, sold, put on blockchain, launched on blockchain, stays there forever and can be seen by all. So that is the kind of transparency it brings to you. It also maintains a secure and decentralized record of transactions. So it is not in a paper, it is not just with you, it is shared. And when you look at the top blockchain participants or big companies globally, well, most of them really come in from US. That is where the major leadership in blockchain has been. So you have New Holdings, which is on the top of it in sense of volumes, also in sense of revenue. It has a market cap of around $58.6 billion. And more than that is Coinbase Global, of course. They're an exchange as well, and a lot of leadership in their name. $76 billion of a market cap is what Coinbase holds. Core Scientific Inc. holds $4.2 billion. And then you have Strategy. Remember, they have been buying Bitcoin, various cryptos, making huge reserves, and doing a lot of proprietary holdings as well when it comes to crypto. Has a huge and the largest, perhaps, market cap at around $106 billion. Mara Holdings is another one on my list, which is on the top 5 here, which has a market cap of around $5.6 billion. There are at least 35 companies like that which have their market cap in millions and billions of dollars, but these are the top lists there.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Welcome back. The Nifty is firmly above that 25,300 mark. News coming in from SEBI. Okay, we missed that. SEBI, I think, will allow FPIs to trade in non-agri commodities. Let's get that flash once again from you on the screen. Okay, other include planning to enable banks, pension funds to trade commodities. All this is pro-MCX, will allow FPI trading in non-agri commodities. And that's the reason why the stock is moving up close to about 3.5%. Prakash Sharma, financial services analyst at Jefferies India, who is joining us from the sidelines of the Jefferies India Forum 2025, is now joining in. Prakash, thanks so much for joining in. Let's get the big picture then on the banks. Now, we've been all waiting for, banking growth to come back in a big way. It's not so far. I think the system-wide loan growth has barely been close to about 10% for the last couple of quarters. Are you seeing a pickup? What would that number look like? And what is the broad call on the India financial space? You like it? Which segments of it do you like?
Yeah, thank you for having me on this show. I think, the bank credit as well as deposits have aligned at about 10%, which is where RBI also wanted to go. I think we should always keep this in mind that, inflation being at a very, very low level probably has a drag of maybe about 150 to 200 basis point vis-a-vis a normal level. So what used to be 4 or 5% inflation, which feeds into credit growth, is probably running at 2%, and therefore the like-to-like number, I think we are running at somewhere close to 12, and as the inflation base normalizes, we'll probably get there. I think the mood here with a lot of corporates who are here, especially we've had a lot of bank CEOs as well, is of optimism. They are seeing potential benefits of the recent cut in GST. The government had come down with decent cut in income tax rate that boosted middle class income by about 5 to 7%, and RBI has given rate cuts, liquidity improvement. So the expectation among most of the people and management we have interacted is of optimism that we should see a decent demand starting next week when we get into a new tax regime, and we keep our fingers crossed for that.
That's the word we have been getting across sectors, right? Waiting for the GST cut to come by, for credit growth to pick up, because demand will pick up too. Prakhar, if we are seeing a pickup happening in the next week and that could continue by the end of this fiscal as well, what is your take? Do you prefer private banks versus public banks, public sector banks? In terms of valuations, where do things stand right now?
We are restricted from making specific comments. I think in Indian banking sector at a very, very broad level, we think that the valuations are actually within very palpable range. Good stocks, high quality stocks which deliver high teens ROEs are trading between 15 to 16 times earnings. In many ways, Indian stocks are not significantly cheap, in some cases even at a discount to large global banks as well. So it's been a period of time that globally we've seen banks, rally. And their valuations have also re-rated, and in that context, Indian banks do not appear to be particularly expensive. Our preference has been always to own quality, and we think that the quality actually drives growth in deposits, which allows growth in credit. So most people, investors, come to India for growth and quality. I think quality still remains. Growth is where they are hoping, the expectation of, the benefits of all these changes that have been done by RBI, government, and the banks themselves starts to feed into growth. And I think second half should be a period where we'll see those benefits come through. I'll just avoid making specific comments on banks. I'm sorry for that.
Fair enough. Prakhar, in the previous quarter, there were at least most of the banks that reported results, barring a few large ones, had two issues. There was some asset quality pressure, slippages had increased, and they had also spoken about credit costs remaining at elevated levels. Now, there is some commentary that is coming in on the fact that credit costs will continue to remain at elevated levels, particularly because of the stress seen in specific segments like the SME market. Do you believe that this will continue to outweigh on the earnings growing forward, even though if their bottom line continues to recover, but asset quality stress would be a concern even if valuations are palatable?
So in my view, the stress as we are seeing in the SME segment is not as widespread. In fact, most of the large banks as well as NBFCs, have not seen any significant stress coming through. That's one of the line of thoughts, at least the large banks have reiterated at our conference as well. Even within NBFCs, the slow economic growth and probably something around, tariffs might have led to some bit of asset quality pressures. As we all know, 1Q is a seasonally weak period. There was unseasonal rains, so it might have had an accentuation of the cash flows impact on the SME sector. But I don't think this is a widespread issue. Some companies would be facing it based on the clients that they've gone through. Even in the retail unsecured segment, I think we are at a fag end of the cycle. RBI came in timely to warn most of the banks and NBFCs of the potential stress. This is like a 2-year sort of a loan, and the peak defaults, I think we are very close to the cycle. So from our top-down perspective, the retail unsecured part, maybe a quarter issue at best, and many of them have already started to see it fading out. We've seen a couple of banks in the previous 1 or 2 calls actually say that either things have stabilized or have started to improve. So I'm not really very concerned on the quality part. I think wherever stress had come last year is already fading, and SME, in my view, is not a very widespread issue at all.
Prakhar, do you look at the exchanges space? Because there is the regulatory overhang, which is kept in lid. How do you expect it to play out?
I think, the SEBI and the exchanges, are planning to take a consultative approach towards it. SEBI chairman has been very, very clear. There were some indications that the expiry period will be extended from weekly to either fortnightly or monthly. I think, let's wait for the guidelines to come. It's an issue that is relevant for exchanges. So, we hope it, kind of clears out soon. Thankfully, we have got well-run and profitable exchanges. So whatever approach they take, I think will not disrupt. It will be more like a phased-out sort of an implementation. But will be better to comment when we have the consultation paper.
So that's right. The other big update with respect to GST has been the insurance space, Prakhar. And while we are talking about that exempt status coming in for insurance premiums, the input tax credit being unavailable continues to be a worry. How do you look at the insurance players right now? Do you think there'll be an increase in premium to pass on the increase in costs? What's the overall take on the stocks per se?
So, generally speaking, I think the GST issue, as has been put out, there is some bit of a loss of input tax credit, especially as cost items like commissions and, maybe some other expenses where they are paying GST is not permissible to be, taken credit for. I think the industry as well as IRDA are in discussions. I think industry is being very careful. I think they see this as an opportunity to deepen penetration in the sector. At the same time, they are kind of consulting with the government if there can be a middle path that can be actually struck. So if it doesn't come through, I think there may be some bit of an impact. Insurance companies will try to do that with a better product mix, distribution commission changes. But I think there still consultations and discussions are going on. I think it's in a way very important for government to recognize that this is an important product. It takes away the tax to zero. Some bit of issues around input tax credit I think can be resolved, but I think the net outcome of putting it in the exempt category actually puts it on the right side of government policy making as well.
One final question, Prakhar, from my end. When a decade ago, when all of these insurance companies went public, the narrative that was given was the fact that insurance is a very underpenetrated sector in the country. The narrative that is given today is that insurance is a very underpenetrated sector in the country. So, despite all of these changes with reforms and GST and so on and so forth, does the underpenetration factor remain the only reason why somebody should be an investor in these insurance companies? And if you are not asking you for a specific recommendation, but where do your preference lies within this space, be it the life insurance, general or the health insurance space?
Tricky in a way for me to answer, but I think I would put it this way. In Indian context, the life insurance companies have run the business very, very well. Indian companies, they have not seen risks emanate from the assets that they own for their policyholders. They have managed the interest rate cycles very well, and they have actually managed profitability at a decently high level. And from a very top-down perspective, the sector doesn't really trade at very obscenely expensive valuations. So it's very well-run type of a sector, doesn't trade very expensive. There have been some regulatory changes which have had some near-term issues on the growth in this sector, but I think those have kind of gone to rest. We should hopefully have at least few very good years of consistent growth in the life insurance sector. General insurance, we've got a fewer direct listings as of now. And I think that's also, a fairly good sector from an ROE perspective. There are certain drags on profitability because either of pricing or competitive intensity, but net-net, the sector has actually kept deepening on penetration. So that's where the recommendation, won't get into that specifically, but very well-run sector. And despite 20 odd years and some economic as well as, sector-specific issues, they've done fairly well to grow.
Okay, all right, Prakhar, pleasure speaking with you. Thank you so much for joining in today and giving us your sense on financials, insurance, exchanges as well. A whole host of sectors we could cover in this conversation. With that, we'll slip into a break. When we return, we'll discuss market technicals with Siddharth Rai Mangla from Stockbox Technologies and also discuss their top trading bets. Welcome back. Well, markets have slightly come off from the highs of the day, so it's a good time to get the trends from the F&O space. Mangalam is joining in with all the updates. Mangalam?
Well, after, having seen a big rally, the market seems to have come off slightly from the highs of the day, but still holding about 25,500 for the frontline index, and that's a positive. In fact, if anything, the risk-on sentiment is up for the market. Why do I say that? Because, the banks are doing well, the IT sector is doing well, advance decline firmly in favor of advances, India VIX is lower, and then you have PSU banks, the PSE segment, and the small cap index, all of them outperforming. So this typically happens when, there is risk-on sentiment in the market. Now, the only key technical levels to watch out for would be on the Nifty IT, which reclaimed the 50-day moving average yesterday. The next important level is the 100-day moving average, just under that 36,800 mark, so watch out for that. We have the 50 and the 100-day moving average on the Nifty Bank, which are about 200-300 points away from here. So those are a couple of levels that we'll watch out for that index. And for the Nifty, 25,300 put has seen a fair amount of writing, telling you support has moved higher to 25,200 thereabouts. And on the way up, 25,500 seems to be a psychological resistance for the frontline index after nearly 11 days of rally. So we'll watch out for that one as well. A lot of long positions added on a couple of these Tata group names. So Tata Consumer, Tata Chem fairly well bid in today's session, and Dalmia Bharat too. But just watch out for HFCL. The overall open interest right now is at 80.5%. If it falls below that 80% of the market-wide position limit, then the stock may exit F&O ban. So that's a stock I'll be watching out for today.
Thank you very much for that. Let's address the market technicals. We've got Siddharth Rai Mangla from Stockbox Technology joining in. Siddharth, first a quick word on the index. Continues to move up higher, chugging along quite finely. And what about your stock calls?
Hi, Rima. Good morning, and thanks for having me on the show, first of all. See, if we talk about Nifty, Rima, we have seen the index turning around very smoothly. The momentum has turned around very smoothly over the past 15 days or so. Even today, Rima, Nifty has managed to touch 25,300 after more than 2 months, so which is a very good thing. But two things here. One, from here, we need to be inherently bullish. The inherent bias in the market should be bullish, because we'll see the index moving towards 25,500 and 25,700 eventually, because all the major indexes have started showing bullish momentum. Second thing, and which is very important, that 11 out of the last 13 sessions have been very positive. The momentum has almost been one way for the past 15 days. So we can see, and we will probably see, some profit bookings and dips coming up from here as we go ahead from here. So this is now a buy on dips market. once we see the index coming back towards its important supports, we should definitely start accumulating. For example, right now the important supports are around 25 to 50, 25 to 100. So once we see the index coming back around these important supports, we can start accumulating in Nifty, because we will eventually see 25,500 and 25,700 being coming up in Nifty in the upcoming days.
Siddharth, thank you for sparing time and joining us today, and look forward to chatting with you more often. Take a short break. On the other side, the management of Laxmi Organic joins in to take the conversation forward. Stay tuned. We'll be right back.
Welcome back. You're still tuned into Trading Hour. Let's talk about a corporate conversation. Last week, Laxmi Organic Industries entered into a global sourcing agreement with Hitachi Energy. Rajan Venkatesh, who is the Managing Director and CEO at Laxmi Organic, is joining us now to discuss this, to understand the revenue potential of the global contract with Hitachi. The second point to discuss would be demand outlook for refrigerants as a segment overall for the company, and also is the worst over in terms of industry dynamics as well. Rajan, good morning. Thank you so much for joining in. Before I talk to you about the company overall, let's talk about this particular contract. What is the potential of this contract that you have with Hitachi? What's the asset turn you're expecting? Do you think in future you can expand this to the Indian entity as well? And when you say 40 to 60% of fluorination revenues would come by FY26, is this deal included in that?
Again, thank you for having me and Laxmi Organic on your show. You've already started with multiple elements of your question. So let me just break it down point by point. First is the entire fluorination platform that we had established at our Lote Parshuram site. This was a relocation of the assets of Miteni that we had acquired in 2019. And what we had laid out for ourselves is to achieve peak revenues of up to 200 crores by FY27. So now in FY26, the focus is to be close to about 40 to 50% of that peak revenues. So that's somewhere between the 80 to 100 crores. And that is what we are chugging. The second lens is that platform provided us obviously in the space of liquids and solids, but that also gave us from our technology capability also the gaseous thing. And that is where we have taken a big step forward, is what you called out, with Hitachi Energy, where we are going to be the global supplier for them for an SF6 replacement. Now, SF6 is used in power transmission as an arc quencher. And the product that we are going to be supporting Hitachi with globally is also going to have the same functionality. And I think we are very, very excited to have Hitachi as a lead partner in this journey of ours. And we will do this in phases. So the first wave of CapEx is what we called out, 75 crores. Asset turn we anticipate to be close to about 1.2x. What we have also done very prudently is we had a CapEx layout of about 1,100 crores. The midpoint of expenditure is happening now as we speak. We have been actually very prudent in the way we have laid out this CapEx. So this 75 crores of CapEx, which was not part of the 1,100 crores, is now can be accommodated in that CapEx layout. So that's the way we are looking at it. I think you had also an element, can this be expanded? Yes, we certainly have the ambition to also see, and Hitachi recently signed their SF6 with Power Grid. So that's the first time they have really made that order entry into India. So we remain also very excited. How can we support their growth also domestically? We also have the opportunity to supply other majors similar to Hitachi because the IP and know-how for this technology remains with Laxmi. So that's the way we are approaching this entire space. And it becomes an important new growth engine for Laxmi in the fluorination space.
Got that. Very well explained, Mr. Venkatesh. So just one word on the capex. You said this 75 crore capex will be incorporated in the broader 1100 crore capex that you had outlined earlier. But you also said that capex for this particular order for Hitachi will be increased progressively. So what will be the incremental capex that you will require? And will you be able to accommodate that within 1100, or will there be a change to the overall capex number?
No, I think so. The lens is when we established our fluorination platform, it was a growth engine. And we've been calling that out also in the past. With the Miteni assets that we relocated to India, the peak revenues was only up to 200 crores. So I think for newer growth opportunities, and Hitachi being one of them, while we have been prudent and been able to accommodate this within that 1,100 crores, but as we also expand our ambition into fluorination, we will need obviously additional capex, and this might be outside of the privy of the 1,100 crores. But what we are really focused on is really on the asset turns. So ideally, we would look at asset turns on our specialty vertical around 1 to 2. So we will try and over-index closer to the 1.2 to 1.5, and also really achieve EBITDAs closer to the 23 to 25% for additional capexes or new capexes that we will lay out in our fluorination business.
Rajan, good morning. Thank you for joining in. Your overseas business, particularly in Europe, your contribution has increased from that geography in the first quarter, while America has seen a decline. Now, does this trend continue because of more demand coming in from Europe? What's the situation you have witnessed on ground in this quarter? Because we are almost coming to the end of this one as well.
Right. So first and foremost, our European business has been an important pillar because we have tank operations in Antwerp and also in Genova. Primarily, the focus in this tank operations has been our essentials business, but we also have direct business with various multinationals in Europe. I think calling out also North America, thankfully, the range of products that we are servicing North America are outside the privy of the current tariffs. So that also is certainly not materially impacting us while it is developing, as we all know, as we speak. So that's been really our strategy. We have double-clicked also on capability building in our European space. So I believe as Europe is also, as you guys are all aware, Europe and other geographies are also going through a large restructuring in the chemical space. And that is where we continue to see opportunities to piggy bank and also tap with our cost positions and already presence on the ground.
We leave the conversation here for now. Thank you very much for joining in. Wish you all the best. We'll get into a break on that note. On the other side, we'll put the spotlight on Media Matrix Worldwide in our special segment Under the Lens.
Welcome back. Time for Under the Lens. The company in focus is Media Matrix Worldwide. Over to Sonal for the deep down.
Oh, yes. So this stock is under the lens today. A stock that was locked in upper circuit yesterday, but don't forget it's still down 38% in the last 1 year. So what's behind the buzz? Let's break it down. It is a B2B focused technology and services provider specializing in value-added services across the mobile and digital ecosystem. It runs its business through two subsidiaries, NextG Devices Private Limited, which handles procurement and distribution of mobile handsets for brands like Vivo, Xiaomi, Realme, Techno and ITE, and Media Matrix Enterprises Limited, which is the other subsidiary, which primarily invests in new and existing projects. So basically, that is an investment arm of the company. The parent company has also extended a corporate guarantee of around 232 crore rupees for NextG as of FY25. But here's where things get really interesting. The scale of related party transactions. Now remember, as per SEBI rules, any related party transaction crossing 1,000 crore rupees or 10% of consolidated turnover needs shareholder approval. Now for FY25, Media Matrix reported revenue of 1887 crore rupees. That means anything above 188.7 crore needs to be cleared by shareholders. Now listen to this from the annual report. NextG with Infotel Business Solutions, it has a related party transactions. The sale of services 20 crores, goods 175 crores. If we go ahead, purchases of 195 crores as well. There are loans given and taken, each 20 crores. That's a total size of 430 crore rupees. Then there are more related party transactions. There's NextG with NextG Ventures. The structure is similar. The sales, purchase of goods, services worth 230 crore rupees plus loans which are unsecured. Then there's third-party transaction, NextG with Madeline Enterprises and Media Matrix Enterprises as well. More loans, more trading between two similar structures as well. And then we have Media Matrix with Infotel Business Solutions and also Infotel Access Enterprises. It might sound confusing, but the bottom line is there are too many subsidiaries. They are having related party transactions which are way beyond that 189 crore threshold that is to be allowed by the shareholders. In fact, that is not it. In the notes to accounts, sales to one of the subsidiary is at 2,076 crore rupees and purchases to another associate is around 617 crore rupees. And this is what the picture looks like. So within the entities, there's so many transactions are happening. All of this while the company's own reported revenues was 1887 crore rupees. So they were actually selling more to one of its related party itself, which is the subsidiary. Let's talk about the balance sheet. Equity in NextG, which is one of the subsidiary, is at 2,759 crore rupees. Equity in the other subsidiary is at 2,103 crore rupees. And the debentures in that subsidiary is staggering at 10,225 crore rupees. All this while cash flow from operations in FY25 stood at negative 26 crore rupees. So basically, the promoter group, which holds 59.3%, is calculating or seeing transactions within the entity itself. And it's clear that Media Matrix is operating more like a holding and funding company than an independent tech business. Yes, related party transactions are common in conglomerates, but here the scale is massive. So massive that the company's revenues, costs and loans are almost entirely intra-group. So for investors, the key question is, when almost the entire business runs within the promoter group itself, can minority shareholders really expect independent growth going forward? So it was like a maze when I looked at and researched the annual report as well.
Undoubtedly so. It was a maze for us to hear it as well. Sonal, thank you for that very, very interesting insights on Media Matrix Worldwide. Well, as Prime Minister Narendra Modi turns 75 today, wishes are pouring in from across the country and around the world, with political leaders, party workers and citizens expressing their gratitude and well wishes for him. Here out, Mukesh Ambani, Kumar Mangalam Birla and Uday Kotak praise the Prime Minister's leadership.
Today is a festive day for 1.45 billion Indians. It is the 75th birthday of our most respected and beloved Prime Minister, Shri Narendra Bhai Modi ji. On behalf of the entire business community of India, on behalf of the Reliance family, and on behalf of the Ambani family, I convey my heartiest felicitations to Prime Minister Modi ji. I have never seen a leader who works so tirelessly for a better future for India and Indians.
I would like to pay my respects to him on his 75th birthday. He is one of those people who have made the largest impact in the history of our nation in terms of the growth and development of our nation. And I would wish him a very happy birthday and also seek his blessings.
His attention to detail, his focus on execution, and his ability to think in an inclusive manner were very clear to me even then. And whenever he went overseas, and on the occasion I had to go with him, I would find him curious to learn the good aspects of the country he visited. And from that learning, how can he make Gujarat and India a better place? Therefore, a relentless hunger in a way for wanting India to become developed.
Wishes pouring in for the Prime Minister. While we still wrap our heads around Media Matrix Worldwide, we leave you with the Nifty 90 points higher. Thank you for tuning into this edition of Trading Hour from Rima, Sonal and me. Thank you for watching. Halftime report on the other side.